Mistakes to avoid when using Forex robots. Using Forex robots, also known as expert advisors, EAs, can greatly enhance trading efficiency by automating strategies and managing trades. However, to fully leverage their capabilities and avoid potential pitfalls, it's crucial to be aware of common mistakes and how to address them. Here are some key mistakes to avoid when utilizing Forex robots. By the way, if you are looking for a reliable broker with very low deposit requirements and quick withdrawals, see the links in the description box below. First and foremost, neglecting proper research is a significant error. Before deploying a Forex robot, it's essential to thoroughly investigate its performance history, strategy, and reliability. Relying on unverified or poorly tested robots can lead to unexpected losses. To mitigate this risk, ensure you check reviews, analyze backtest results, and verify that the robot comes from a reputable source. Equally important is not overlooking backtesting. Backtesting allows you to see how the robot would have performed under historical market conditions. Skipping this step can result in unforeseen issues when the robot is applied to live trading environments. Comprehensive backtesting, covering a range of market scenarios, is vital to assess the robot's robustness and effectiveness. Optimization of the Forex robot is another critical aspect. Forex robots need to be adjusted for current market conditions, which involves tweaking settings and parameters to fit the prevailing environment. Using default settings without optimization can lead to subpar performance. Regularly reviewing and optimizing the robot's settings in response to changing market conditions is essential for maintaining its effectiveness. Monitoring the performance of your Forex robot is also crucial. Despite being automated, Forex robots require regular oversight. Automated trading does not mean you can set the robot and forget it. Frequent monitoring allows you to identify any issues, such as malfunctioning trades or unexpected market behavior, and make necessary adjustments to avoid potential losses. Another mistake is using robots in unfamiliar markets. Some Forex robots are designed for specific currency pairs or market conditions. Deploying a robot in markets or currency pairs for which it was not designed can result in poor performance. It's important to ensure that the robot is compatible with the markets you are trading and aligns with your overall trading strategy. Over-reliance on automation can also be problematic. Relying solely on Forex robots without understanding the underlying strategy can be risky. Having a basic understanding of how the robot operates and the strategy it employs is crucial. This knowledge can help you make informed decisions and intervene if necessary, rather than blindly trusting the robot's actions. Inadequate risk management is another common mistake. Forex robots should be used in conjunction with sound risk management practices. This includes setting stop-loss limits, adjusting trade sizes, and diversifying strategies. Failing to implement proper risk management can lead to significant losses, especially if the robot encounters unexpected market conditions. Broker compatibility is also a factor to consider. Not all Forex robots are compatible with every broker. Ensure that the robot you choose is compatible with your broker's platform and trading conditions. Compatibility issues can lead to execution problems or other technical difficulties, affecting the robot's performance. Ignoring market news is another mistake to avoid. Forex robots may not account for major news events or economic reports that can significantly impact the market. Being aware of upcoming news events and their potential effects on your robot's performance is important. Adjusting or pausing trading during high-impact news events can be a prudent strategy to avoid adverse effects. Lastly, overtrading is a common issue. Some Forex robots may generate a high volume of trades, which can increase transaction costs and expose you to additional market risk. Evaluating the robot's trading frequency and ensuring it aligns with your risk tolerance and trading goals is essential to avoid overtrading pitfalls. In summary, while Forex robots can offer significant advantages in terms of automation and efficiency, avoiding these common mistakes is crucial for optimizing their performance and managing risk. Conducting thorough research, performing backtesting and optimization, regularly monitoring performance, and implementing sound risk management practices are essential steps for successfully utilizing Forex robots.